Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start the week, the Australian dollar has failed to shake the bearish sentiment since Governor Lowy last week hinted that possible more rate cuts were down the road. Tomorrow is the RBA rate decision at 2:30 and the market is pricing in around 70 to 75% that the RBA will cut rates by 25 basis points down to 0.75%. Also to note that former Treasurer Peter Costello warned rate cuts won't do much for the economy. With the financial markets putting roughly, as I said, about 70 or maybe 80 chance on official rate cut, is that Mr. Costello said last week that lowering the cash rate from 1% might result in a lower Australia dollar, but otherwise would have limited impact on the real economy. From the technical pattern, I am still looking down towards 66.80 as an initial target, but be on your aware that the last three attempts was rejected, and we got a long-tailed dragonfly doji, a bullish outside range day, and another bullish outside range day. And as I always say, that patterns do repeat themselves, or history tends to repeat itself. This same picture could be revisited in terms of a rejection from 66.80 and look back towards the top side. Do note there is a little bit of divergence also on the RSI, so I am keeping a very close watch in how we decline from present levels. Little has changed really in the bearish case for the euro, but nevertheless the dollar index, which measures the greenback strength against a basket of 6 major currencies, is still hugging towards that near that 99 level. A break above there would give further implications to the downside, and therefore could see the market move towards the region of 108.65 and reassess from there. Resistance is seen at present to 109.65 to 110.30 to 35. .yen still a bit of a question mark here as the market flirts around the 108 level. Nevertheless, from the technical pattern towards 108.40.60 is a cap, and I expect to see the bears return in aggressive manner to protect this level. If you note, the RSI is a little bit mixed, but the MACD is flat as a tack. I don't see any real threat to the upside at present. I do believe the market should turn around and look back towards 106.70 and reassess from there, where the recently rejection last week. The pound is weaker, and since taking out the level of 124.15 has put the market on course to a challenge of 121.70 and reassess from there. The gold took another stab to this downside, and as you can see at present still remains a threat. If we don't get a bounce off this level 1,478.84, the fact is we could see further risk to the downside, and the measured move from the head and shoulders pattern that I've put in line here is the fact is we could be looking down towards the region 1,420 to 35 if we get the breach. But wait for the cut first before getting all bed up, because the market could reject this level again. This is seen as either a continuation or a reversal, and at present the way the technicals are looking, it could be a reversal, but keep in mind we need to see 78 break. Wrapping up with oil, well, we've got two dragonfly dojis and a hammer, and the market is still not responding to a bullish case. Therefore, could see further risk to the downside. We've got an ADX trending and also the MACD. What would really get the bears focused on the downside if we get a break of $54.40, where I've outlined here. If so, then we are looking back towards the downside of $51 a barrel. So if you're trading from alongside, the fact is the break of 54.40 negates these candles and therefore reverses the view from 58, as I say, down to 51. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to this new week.